In a world full of noise and uncertainty, IG is the investment platform that backs you. Forget the dubious tips from that guy down the pub. Get real-time insights, analysis and tools. No more fat cat brokers clawing your gains. Pay zero commission on your investments. Switch to a platform trusted by investors for over 50 years. IG. Trade, invest, progress.
Good afternoon, welcome to the 2 o'clock show. Yes, that's right, we're back on proper times. It is the Rich and Piers show. Welcome, welcome, Piers Buckworth.
Hello, matey. It's always a joy. I look forward to Tuesdays. More than Wednesdays, because Wednesdays I've kind of had enough of you. But Tuesdays are exciting because it's full of hope, full of hope.
I really enjoyed one of the comments on, I think it was on TikTok, perhaps YouTube, that said, I can't work out whether Rich actually likes Piers or not.
Oh, yeah. Oh,
I've been wondering that for 10 years.
Yeah, I know. It's one of life's big mysteries. I love that, though. I love the fact that the viewers are genuinely trying to figure out whether or not you actually like me or not. That's fair enough. I'm not that likable.
It's Kramer and what's his name, David.
Oh yeah, David Faber.
David Faber.
No, well, exactly right. Those two are best mates, by the way. If you obviously if you can read between the lines that they've known each other for 35 years and they've clearly got a lot of respect for each other. But yeah, they just take the piss out of each other. But again, they are the yin and yang, right?
Good afternoon to all of you, especially Tim the Chin, who's just asked, has your barber gone on holiday, Piers?
Well, I've got some volume today. What's wrong with that? We're looking good today, right?
Fantastic. Right, well, let's dig into it straight off. No messing around here, because we have got an announcement in Marvell, which came out around about 1 hour ago.
How exciting.
Now, this is
Or is it exciting?
because this is one of your previous loves. I feel like
but let me at least just try and explain to you what I think about this, right? Because, and I have tried to make this clear, bearing in mind, so there's two things. Number one is when I first started talking about this stock, it was when it had pulled back from where God, we have to go back. It was trading at where are we now? It was trading at 40. It came all the way back to the low 60s, right?
Yeah.
Anyway,
that's when you started pushing it. I'll give you that.
I followed this stock for many years, and it's a really complicated stock. I mean, all you have to do is zoom out, look at the 5-year chart. It's very volatile. And the reason why it's volatile is because it's not clean. It lives in the same family of GPU accelerators, along with NVIDIA, along with AMD. But the reason why it's not a NVIDIA and an AMD is because they have 4 different revenue streams that are all relatively similar in size, and therefore their earnings and their revenue is quite complicated and quite choppy, and that's very much represented in the stock price. Now, we've entered a new era now where the likes of, we all know what happened to Micron, trundling along, doing absolutely nothing. And then suddenly we realized that they needed their memory in the data center.
Yeah.
Now, these guys are in a similar situation, the fact that their high bandwidth custom chips, which they compete with Broadcom in this department, are required in multiple things in this world. But let's face it, the thing that really matters is the AI data center. The CEO of this company has spent 3 quarters in a row screaming at us that this is a game changer for them.
Yeah.
But the market, this is not on the guest list. Okay, and this is a critical thing to understand. And those of you who don't understand and haven't followed markets for a long time, let me try and explain what I mean by that. It's all well and good for them to have good numbers. It's all well and good for the CEO to shout at us that the world's changing. But if the stock hasn't been added to the guest list, and by that I mean the list of stocks that is bid up consistently and loved by the market, accepted by the institutional community and the retail community, and there's a list of, I'm fairly certain you guys know what those stocks are. Sometimes they come and go from favor. Marvell, it's been a long time since they've been on that list, right? So rallies are sold. Now today we get incredible news. At face value, it's incredible news, right? NVIDIA are investing $2 billion. Bear in mind, NVIDIA are throwing money at so many different people. And every single time they do it, they did it, what was it, 2 weeks ago, 3 weeks ago, they threw $2 billion at Coherent and Lumentum. Mm-hmm. Those stocks are about 20% lower since that moment. Now that's got a lot to do with the market and the crowding in those stocks, fine. But the fact that NVIDIA are giving them $2 billion to the untrained eye is like, this is incredible. But bearing in mind, they are endorsing and throwing money at a lot of people. So after all is said and done, I think the stock's going to rally. I wouldn't mind. It's got to break out. Look at that chart. I mean, if you want to just go back to the technicals, it's an absolute dog's breakfast. I mean, look at it.
Well, that's the last 72 hours. We're trading where we were on Friday, but it's got a deal with NVIDIA.
Yeah, but what does that mean? What does the deal with NVIDIA mean? Okay, that's my point.
Go on,
right?
tell us.
We hear this all the time. I've done a deal with NVIDIA. That's great, but does it impact your top and bottom line? And the question is, it's an open question. They are allowing NVIDIA to. It's quite complicated. They're allowing NVIDIA to run their custom chips on in conjunction with their GPUs within the data center. It's actually really exciting, but how does it? Is it going to?
I feel like you're tarnishing this because of previous bad experiences.
I'm tarnishing it because I know this. Listen, my view is that this stock makes it back to 120. It's trading at.
Okay, so that's your over.
But it's not going to be a fun journey to get there.
Well, it hasn't been so far.
So that's all I'm saying. Like, am I super excited about piling into Marvell? No, because it needs to prove itself that the volatility has calmed down in the stock and that their revenue streams are more consistent. Like Micron, right? They went from having a really choppy revenue streams historically, and that's why the stock went like that and was uninvestable, to a much, much more predictable revenue stream. And that's what we need to see in Marvell.
Now, the big worry here was that Microsoft were going to drop them in a contract. That was about 3 months ago.
Yeah.
And that was the big drop that we had.
Actually, Meta, I think, but yeah.
What's that, sorry?
I think it was Meta, but yeah. So
was it Meta? No, there was definitely a story around Microsoft as well. But let's go back a little bit further then. It was...
Yeah, so just to be clear, Amazon are their #1 customer, 16% of revenue. Microsoft 7.53.
Here we were, so 107, and it dropped down to 50 in April last year, and then we got back to 100, and it dropped down to 70. And that's the kind of volatility that you're talking about.
That's the kind of volatility that you have to be willing to accept when you trade Marvell. Until proven otherwise, look at that chart. It is absolutely all over the place. There's gaps up, there's gaps down.
Yeah.
It's an absolute mess. So, you know, the reason why I'm not excited about it is because I've just had so much experience with just having to deal with the random volatility of the stock. You just get your teeth into it, and then you get a headline that, you know, that Broadcom have done a deal with Microsoft behind their back, and the stock gaps down 10%. So
I feel like you've been hurt by this stock. Like,
no, I've personally never actually been for long enough to been hurt, but I've just emotionally been hurt by it, I guess, by just watching it.
Yeah, that's what I'm talking about. I'm talking about your emotions, Piers.
Yeah, well, I've never lost much money with it. Yeah, but yeah, it's a tricky one. The entire semiconductor space right now is a bit of a landmine, quite frankly. But
let's talk about landmines, because my goodness, Micron has had a disastrous week since we were last here.
Well, let's talk about this.
They came out with numbers. What the hell's happened?
There's a few things going on here. I mean, there's traveled and arrived. There is peak earnings, peak revenue. We discussed that. There's crowding, there's rotations, and then of course we have this other thing going on, which is the turbo quant from Google, which is not actually new news. We all know that they've got this algorithm running in the background, and just to be clear, this is not an actual bit of hardware. This is literally an algorithm that increases the speed and efficiency in the data center and therefore reduces the memory requirement. You know, I spoke to a friend of mine who's a hedge fund manager the other day, who's very quanty and specializes, and he said he wrote a piece on this months ago. So there's nothing new about this technology, but you have to be careful because it's very noisy. We were talking about this backstage about, you know, how much of this is noise, how much of it is already you know, the selling is, the excuse is given to that, but actually in reality this is the market selling off a stock which they think is already reached, you know, their peak revenue, peak earnings. It's a tough one. You know, this trading on 6.7 times forward. Good luck trying to find a stock in the market that's trading on that after having a 500% rally. So I actually bought a clip of this yesterday.
So did I.
No, wait up, very small, and then I stopped myself out because the price action was so bad, right? And it was a good. I'm using this in the market. It's very educational. So I started again today, pre-market, but very small.
You can see exactly where I bought them. I bought them at 334.
But have you seen that chart?
We're already trading 319. That was yesterday at like. Yeah. I don't know, 4 o'clock, 5 o'clock?
Yeah. So I started again really small. But if you zoom out on the 5-year and use the GPC on Bloomberg, which is very good for the trending, the trend lines. Look at the two. Every stock, as you well know, will eventually come back to its 200-day. These guys are miles above their 200-day still. So you know, keep it. They're just touching that's bang on the 100-day moving average where it is right now. Just so you know.
So this time last year, this stock was trading at $68. Run us through the story and the supply of memory that's caused this stock to have such a good run, and why some people feel that a slowdown in the economy or through this Google product might hamper the supply concerns around memory.
Yeah, so first and foremost, sorry to sound like a broken record, but DRAM is one of the most cyclical products in the world.
And what do you mean by cyclical?
Cyclical means it's subject to booms and busts to different degrees of aggression. And that is usually applicable to commodities, which go with traditional economic cycles. Now, traditional economic cycles have changed somewhat in definition these days. We're not dealing with the 80s and the 90s. We're dealing with an era of quantitative easing and a whole bunch of different macro factors which are impacting the entire macro cocktail. So you need to take that into consideration. But nonetheless, we're dealing with DRAM prices, which went up 75%. Which is the first time in history they've gone up that aggressively and hung on to those highs, because the demand coming from AI data centers kind of took the market by surprise, and they could finally, for the first time ever with Micron, is see a runway of at least 5 years where that demand was predictable. And therefore...
And that 5 years started 12 months ago?
Correct, exactly. Now, fast forward 1 year, everyone in the world's long Micron. It's actually still not a very big market cap, but you've got real serious money. I got speaking to fund managers at the beginning of the year who were like, what do we buy this year? Because Mag 7's kind of off the boil. You can't really... Yeah. So, you know, these memory stocks look cheap. And they are cheap, but you have to be very careful with the word cheap, because the cyclical stocks are the cheapest at the peak.
Yeah, that's as the miners are.
Correct. So there we go, Richie. Your miners and my semiconductors, they are the ultimate cyclicals, right? So you've got to be very careful calling a stock cheap, because the reason why it's cheap is because they're selling for the highest price that they'll ever sell. Now, the bulls would argue, let's take Joseph Moore again, let's refer to him, Morgan Stanley, the #1 semiconductor analyst in the world. He is banging the table on this stock.
Still.
Yeah, he came out twice in comments, I think, in the last week. Now, I don't disagree that this stock is going to have a big bounce. And obviously I don't, because I'm trying to buy it. But am I going to hang around for it to be some massive super cycle and change the way that DRAM operates for the rest of life? No way.
No, so this bounces from 320 to 420.
Max. And can I just put something in perspective? The analysts have done what they always do, of course. They chase it up. Most of them just literally just chase it. Again, Citigroup upgraded this stock 4 weeks ago. Today they cut it. Right? Why? And what was their excuse? DRAM prices coming down. So they raised it 4 weeks ago because DRAM prices were going up. Now they cut it. It's literally a useless. But that's the nature of the situation, right? That's how this game works.
But he's still got a 32% upside on the
His
stock.
price target's still miles above, but you also have to take that, with the nuance that comes with that. So it's a complicated little picture. All I know is it's approaching oversold, and it's got a tradable bounce. That's what I'm trying to shoot for. I hope it comes back more on the open, because I've only got a tiny, tiny clip at this stage. I'm going to go for another clip on the open, maybe pre-open. What have we got? 17 minutes, so I'll probably wait for the open. So that's that one. SanDisk is in the similar boat, but I'm not touching that.
You called this well, because I looked at it at 380, and I had a nibble at 380, and
I think my comment was be careful and
be careful.
Average down very gently.
Phil's gone way too early on the screen up. Still talking about Micron. So you called it well. Well done.
Well, that's what you when you're whispering to yourself, you do come to me for tech advice, as I would come to you for metals and mining advice. It's the match made in heaven.
Well, macro is where our minds
Let's talk about macro.
Let's talk about macro, because we've got the treasury prices and these 10-year yields. 10-year yields, 431. And we had the 30-year peak last week at 5%. That's come back down to 4.9. So have we seen a change in mindset about what we were talking about previously? What we were talking about is higher oil equals higher inflation, and all the machines in the market automatically jumped from higher inflation to higher interest rates. No, there's no way that this present economy can handle higher interest rates on top of higher gas prices and higher food prices. The market's coming around to this idea. What does that affect when you see the change back to no interest rate hikes on the table?
Well, yeah, exactly right. I mean, that's why that's why I think the market, even the bearish people in this market, can know full well what happens next, unless we get some major escalation. Listen, oil has stopped moving to a degree, but it's creeping up. Listen, I spend all day thinking about oil and thinking about, reading what oil and gas analysts have got to say and trying to figure it out myself. And, I can see a scenario where WTI gets back to 120, and that's not going to be good. I can see that scenario. The way that my brain works in this market right now is that I'm still playing for a de-escalation bounce in the market.
Yeah.
Right, and that would include a stab lower in oil, a stab higher in equities, in particular probably the Russell index, loads of these small caps that have been hammered. But then what, right? We're not going to get out of this oil situation really quickly. I mean, listen to what Trump's latest comments are. I mean, not that we need to really take what he or the media is reporting to us, that seriously. Because
this is comical.
But I mean, he essentially said, listen, and I just don't. I'm not going to get into my opinion on this, but he essentially said, listen, if you want oil from the Strait of Hormuz, just come and get it, because we've got our own oil, or you can buy it from us, but you haven't helped us, so go and go.
Speaking to UK and to France.
Yeah, and listen, he has got a point, right? They haven't done anything to help him. But listen, let's not go into it. But the point being is that we have to, as traders, we have to deal with this just painful headline world that we're literally trading from headline to headline. Mm-hmm. There could be a headline in 5 minutes' time that's really bad. The market could easily collapse again. But I'm not. I just reduced my IWM short again. I'm actually getting pretty naked, long.
Yeah, I am as well, because now we're getting to the point where Trump knows his limits, and he fully understands. Scott Bessent is in his ear, and they're watching bonds, they're watching yields, they're watching the oil price. They're very conscious of it. Yeah. I actually think they're sitting there on the offer at $100 or $101.
Probably, yeah.
And they are. You can see every time the market is starting to panic, then he comes out with some kind of comment as in, we're nearly there, it's nearly finished, our job's almost done.
And that's what that's his playbook, right? When the market pushes him, we get a tweet.
Yeah.
The only question is, the wild card here is Iran, right? I mean, listen, Iran live on a different planet. Listen, it's very hard to gauge how far they're willing to push this. I mean,
but the important thing is the market is now being sensible in the fact that it's attacking growth.
Yeah.
Previously, we were trying to price in rate increases.
Yeah.
Which meant that gold and silver got hammered.
Correct.
Right? Now, and treasuries were getting hammered. Now, bonds are actually behaving. Gold and silver are going higher.
Yes, and
stocks are getting.
And I think we need to talk about that, because that is, my community laugh at me for using the word nuance, but I don't know what other word to use, because when it comes to understanding the dynamics that are moving the precious metals, guys, especially when you break that down into the different ones. Mm-hmm. But as we've discussed on the show, the real interest rates, which ultimately define the movement of gold, and yes, there are other variables that move it from time to time, but that is the core. They are. If you combine the positioning and the crowding and the rotation and the real interest rate, we saw gold collapse, gold stocks in particular. But then the market has switched back, and we need to have a running spread of, of course, the interest rate minus the inflation rate, which of course is a moving target.
10-year minus interest rate expectations.
Correct, which is a moving target. And when you see gold and silver outperforming the market, on a day when the market's getting hammered, that the market's moved back to trading precious metals as if they were precious metals. And I have a long in the silver mining ETF, and it's for that exact reason, because these silver mining companies, they make a lot of money where the silver's trading at 50 or 100. Prices are locked in the future, as you know. It doesn't matter whether silver's trading at 50 or 100 for these guys. They're making the same amount of money. Mm-hmm. So you take a company like Pan American Silver, for example. Yes, it trades in sympathy with the physical, but in reality, they're not making any less or more money. So they are finding their feet a little bit. So
Do you think the leverage has come out of silver now?
I think a lot of it's come out, for sure, yeah.
Yeah,
I think it'd be fair to say a lot's come out, yeah.
What was that? The 23rd of March, Monday. I remember because I woke up at 5 o'clock in the morning and had a look and saw gold down at 4,100 and silver down at $64, and thought that feels a little bit pukey. So that was the capitulation.
Yep.
And it's built a base now, and we're seeing a really strong day in silver today.
Yeah. And it's notable how few sellers there are as well. And that's good. I'm very happy about that, because it's going to help out. It's certainly going to help my book out. But It's a very, very, very complicated market, mate, and you've got to be hands-on with this
Okay,
stuff.
so let's break it down then, and let's try and get it into a simple diagram, like in physics. What's the diagrams that you get that are just
The Venn? No, which good question.
So the diagram would be oil price higher, rates. Do you put them up or put them down?
If the oil price goes higher.
Oil price higher.
Well, I think actual rates, forward expectations of rates, higher.
Which was last week, but now that's changed.
And there's also a nuance to that, because there is a point at which the market will start pricing in lower because of the economic damage.
Exactly. And that's the
question.
What I'm trying to get at. Now at this moment in time, we are thinking about lower rates and yields coming down. So what's the next stage? What happens next if oil goes higher or oil goes lower? If oil goes higher, you're in a real problem, because the one thing that can save the economy then gets taken away. Because if oil's at 120, we actually can't cut rates anymore.
No, because that's exactly the point, right? The economic, and that's stagflation, right? The economic damage is there, but the Fed can't do anything about it because the inflation's there, and that's their number one. That's their mandate, inflation.
And then if
that's
comes,
the worst case scenario.
If oil comes lower, then we're in rally mode then, aren't we? Because we can cut rates.
Yes. Yeah, well, I mean, yeah, oil is everything.
And
right?
Stop the economic slowdown.
Yeah. And
that's when you start to see equities.
Yeah, I'm fascinated to see how this, just the whole oil market is doing my head in, as it is everyone. But just because I can see a scenario where we get back down to the low 80s quite quickly. But I can't see a scenario how we can get down to the 60s and low 70s anytime soon. But that's not the end of the world, right? Oil has spent a lot of time in the high 70s and early 80s and mid 80s for before. It's not the end of the world, but above 100 it is really bad, right? And I mean, you can see what's going on in Asia right now.
Right, time for a quick pop quiz before we go to the break. So we're going to get Phil to fill in a quick poll, and the poll is: for every 10% increase in oil, how much does it cost the US economy? For every 10% increase in oil, how much does it cost the US economy over a year? Is it 7 billion, 70 billion, 700 billion, or 7 trillion?
Good question.
So how much does it cost the US economy in a year for every 10% increase in oil? Obviously, we've moved 30%, about 30% in oil, probably 40%.
Yeah,
actually.
more than that, exactly.
Yeah, 40% we've moved up. So, and this is all in dollars. So that is your poll. That's going to do you the break. We'll take a 2-minute break and we shall see you shortly.
In a world full of noise and uncertainty, IG is the investment platform that backs you. Forget the dubious tips from that guy down the pub. Get real-time insights, analysis and tools. No more fat cap brokers clawing your gains. Pay zero commission on your investments. Switch to a platform trusted by investors for over 50 years. IG. Trade, invest, progress.
This is brilliant. So Trump, somebody's just reminded Trump that the King's coming to visit. So earlier, an hour and a half ago, United Kingdom, you have to start learning how to fight for yourself. Go get your own oil. See if you can build up some delayed courage.
Yeah.
10 minutes ago, he's realised, Melania and I are pleased to announce that Their Majesties, the King and Queen of United Kingdom, will visit United States for a historic state visit. This momentous occasion will be, I look forward to spending time with the King, who I greatly respect. It will be terrific. Somebody's just literally.
Well, yeah, but unfortunately, that's the separation of that's a great example of the separation of. I'm not going to get into this subject.
It just proves that he does not think and he doesn't consult anybody before he writes these bloody.
But I mean, King Charles and Keir Starmer, two very different animals.
But he hasn't talked about Keir Starmer. He's talked about the United Kingdom.
Yeah, but he means
the Kingdom. And then somebody's gone, you can't do that. You've got the King coming to visit, you idiot.
Yeah, well, I think he deeply respects the United Kingdom and its history, and especially the monarchy. But I think he's got zero respect for Keir Starmer. You heard what he said about him in the Oval Office the other day, when they're in the same breath as talking about Winston Churchill. And quite frankly, Keir Starmer is a wet blanket. I mean, what?
Or off. Right.
Yeah.
So we've got 1 minute to go. The answer to the poll, let's get this done before the market open, is of course,
look at this,
70 billion. So 70 billion, it hits. So 4 times that, we're talking about 280 billion over a whole year. Right. Now, Tom Lee's point last night on CNBC was that's completely wiped out by the increased defense spending because of this Iran war. So forget the oil price. The oil price is hitting our economy by $280 billion, but that's all made up for in defense spending. And on top of that, you've got the big, beautiful bill. And that's not Bill Clinton, of course.
Yeah.
Our hero.
Our hero. I love it, mate. Wow.
So,
I don't know what to say about that, mate. I mean,
well, it's a great stat, isn't it? Because everybody's so worried about oil. Is it really going to stop the American spending? They'll just take out another loan.
I don't think higher oil is going to have too much impact on the Americans at all. They've got their own oil. I think it's more about Asia and and parts of Europe who are hostage to this.
Right, count us down, sir.
Here we go. Well, we're open now, mate. No countdown.
God, you really don't go by this playing along, do you?
Nope. Here we go. Right, so we are off and running.
It's the airlines higher, despite oil not really moving. Airlines up 2.5%, 2.5%. Phil, how about you ring a bell? Go on, get a sound effect. So American Airlines and Delta up between 1.5% and 2.5%. Caterpillar had a bad day yesterday.
Yeah.
We're seeing Amazon higher, Alphabet higher. I bought some Alphabet yesterday.
Nice. What, for the book, yeah?
273 for the book, because we loved it at 320, so why don't we love it more at 273?
Yep.
Meta, I bought some yesterday. That was an absolute steal. I don't know what got into me yesterday. 6 a.m. I bought Meta, Alphabet. Meta I managed to pick up at $532. Now trading $550.
Yeah.
A good purchase.
That's nice. I mean, listen, a lot of these the big boys, the big high quality names are quite oversold. They feel quite safe, dare I say the word safe.
I've got a theory for that, which I'm going to give you in 5 minutes' time. We can tell you the reason why Mag 7 has been sold when they are the safe names. There's no reason to sell them. They don't have huge debt.
No, they're not. I mean, they are the safe names. But then again, this market that we're in right now is, if you zoom out and take a different view to that, and look, it's to put a 5-year chart on these things, or dare I say a 10-year chart on these things.
You know, forget that. That's rubbish.
But it was not.
I've got the reason why
it's not rubbish at all, mate.
You don't know it
You never
yet.
put any weight whatsoever on positioning, and that's why we argue about this
You're
stuff.
annoyed you don't know the reason for it.
Go on,
I'm
then.
about to tell you.
Fine, but I think you're probably going to be wrong. But go on then.
Microsoft. Oh dear, where is Microsoft going to bottom? Down 35% from its highs. It's up 2 this morning. We've got Broadcom up 2, Intel up 2, and Nvidia. It's a strong morning. It is a strong morning.
It's a strong start. It's very keen to bounce, isn't it? We just need that little bit of extra push.
Let's see Piers' names. Piers' names are CoreWeave up 6, Nebius up 6, SanDisk up 2.8. You've got, what else there? Taiwan Semi up 2, Plug Power up 2. That's really done nothing this whole time, has it, Plug Power?
Yeah, it's just I don't think the market's going to give them any proper love until they actually turn that profit that they promised us. Again, bearing in mind, the market is the wrong market for this stuff, right? The market is not celebrating companies that don't make money, especially ones with leveraged balance sheets. In fact, that's a double whammy.
Strategy. Oh, I'll tell you what, thank you very much, Dave. Dave messaged me yesterday and said, do you know what? Smarter Web's probably at about 75% of its Bitcoin value at the moment. Have a look. And I had a look and I dipped my toe in the water this morning in Smarter Web. But strategy to 122, is this?
Strategy, where are you, my little friend? I've got that in the
book.
Illuma's up nicely. Yeah, it's just, I mean, anything could happen. Your strategy's flat on the day. I mean, it hasn't been doing too much, to be honest with you.
But this has been a shocker, hasn't it?
Now
at the lowest that it has been.
Yeah, it's down there.
Since, well, a month ago. Is Bitcoin lower than it was a month ago?
It's probably, I think it's almost 1 for 1, mate.
Yeah. Okay, so strategy there at, what do you want to do with strategy? Do you want to add to it?
I want to add to it, yeah.
Okay.
Yep. But we only bought, we bought that small with the view that we were going to buy some more if it comes off, right?
Okay, so is now the time?
Yeah, I think that, so now you've brought my attention to the level, yeah. I think it's a great time, just a small. The way I would play this, I'd do it in 3 clips. But you know, if you don't buy the 3rd clip, so be it.
So is this clip 2?
This is clip 2.
$121. Clip 2 in strategy, 2 of 3.
Yeah, I like that a lot. Where's Qualcomm today? Qualcomm's up nicely. That's good news.
Right, let's have a look at the marvelous thing that is Marvell, up 7.8%.
Yeah.
Actually quite stable. From,
yeah, that was. I'm just going to give that a little bit of time to breathe. I'm not that excited about it, if I'm honest, mate. As you know, God, it's fascinating to see some of these stocks. Just.
Well, what are you looking at?
Well, just today, the open so far is all the stuff that everyone loved that got hammered is now up 5, 6, 7% on the open. So sorry, 3, 4, 5, 6, 7% on the open.
Meta is one of the ones that I think is one of the best
Yeah.
opportunities I've seen in a long time. Seeing Meta at 530.
Yeah, yeah, I don't disagree with that too much, but again, yeah. I mean, listen, as a
trading buy.
As a trading buy, sure. Yeah.
Sure. Right, what have we got? So let's check what the actual indices are doing. Indices fairly stable. Nasdaq now up 1.3. As I say, I've gone from 100% cash about 5 months ago to having slowly built that up probably to 80% cash, 20% invested. I am now almost 100% invested. I am.
Wow, that's terrifying.
I'm not talking about on leverage, of course. I'm talking about in my ISA, talking about in my SIP. And in about 5 minutes' time, I'm going to show you where my percentage holdings are in my ISA and SIP. You excited for that?
Yeah, that would be interesting. I mean, also worth noting that you took all of your money out of the market. When was it? 2, 3 months ago?
Yeah, I think it was the end of
last year. So you're happy with a 5, what have we seen? 6? How far is the S&P down since you did saw that?
6%.
6%. It does worry me though, that you are so bullish. You and Mike Wilson, the 2 perma bears, are max bullish. That scares the hell out of me, man. Because yeah, for obvious reasons.
Right. Hedge funds are now short. CTAs.
Yeah, no, I don't disagree. The positioning's very bearish.
Well, no, I'm going through them for the people that don't know what you know.
Yeah.
It's about half and half out there. Hedge funds are short. CTAs, right? So these commodity trading algorithms, that is for me, the real nasty, the things that have ruined the market. The CTAs are now short and they have to buy S&P 500 under every circumstances.
Yeah.
If it goes down a lot, they buy. If it stays where it is, they buy. And if it goes up, they buy. So CTAs are now as short as they're going to be. They're short $32 billion of S&P 500. And it's that kind of time that if there is a if there's something happens, which is a positive, and the market goes up to 6,600, these machines have got to buy 32 billion of S&P. And they'll probably start going long at that point because the market will be at 6,700 before we blink.
That's why these moves, that's why you've got, no matter how bearish you are, if you're a trader, you'll be very, very, very careful about being short when the positionings, you can be right in terms of the fundamentals over the medium term, but you can be dead wrong and get your face ripped off in a 5% rally in an index. I
do agree with you in that I don't understand why oil hasn't tested the highs again. It should be 110 WTI.
Yeah, I mean, listen, I think the numbers are 11. I saw this fantastic bit of research that Bloomberg did actually yesterday, and it had a live tracker of how many barrels of oil were not getting through in the time that you read the actual piece. It was really, really detailed piece of research. And the bottom line is that they basically came to the conclusion that net, there's 11 million barrels not getting to the market right now after all is said and done. That takes into consideration what the IEA are doing, what everyone's doing. And it's so difficult to price that in.
So 11 million barrels are not getting through per day. Then you've got demand destruction, which I would say 2 million barrels. And then you've got inventories and what the IEA and the G7 are releasing into the market. So that leads me on to tell you and explain to you why Mag 7's been sold off so much.
Yeah, I mean, listen, again, for me...
Do you want me to tell you or not?
Go, tell me,
Right.
Please.
All these countries that sell oil around the Strait of Hormuz, they use that money. And that's guaranteed income. At no point did they expect or budget for having to take their revenues to zero or almost zero in such a short space of time. Right? Now that's the Saudi Sovereign Wealth Fund, it's the Qatari Sovereign Wealth Fund, it's Abu Dhabi. I think that they're selling treasuries and they're selling Mag 7 because those are the most liquid things in the world, and gold.
And
I think that is where they're getting the cash to make up for the zero oil revenues that they're suddenly blowing a hole in their budget. They're like anybody else. They need cash. If you're not getting paid, right, or in America when the government go on strike and they don't pay you, you got to do something for cash. And if you've got a whole load of liquid instruments sitting there, boom, easy. Not that mad, is it?
No, I don't disagree with that. I mean, that's kind of much more my language, actually, because that's when you see these moves that are the fundamentals and the rationale of what's going on have completely disappeared from the market, because that's not what the market's doing. The market's doing macro right now. It's doing positioning and rotations and macro, and that filters into exactly what you've just said. So we agree. And there's therefore, why are you trying to buy things when you know that that's going on? Yeah, sure.
Because it's happened.
No, yeah, fine. But and I don't disagree that we're very close to the end of that. But we're in an environment where you've got to be very careful, because the powers that be, which is everything that most people don't understand behind the scenes, the macro, exactly what you've just said is a great example of that, can whack you. So I mean, but yeah, listen. You could have argued 3 months ago that Meta was also a great buy, right? It rallied aggressively. Everyone said, look at this, it's so oversold, and then it's right there back down to the lows.
Let's have a look at the Mag 7 actually, and let's just see, because there is a recovery. But my God, I looked closely at these prices yesterday, and I don't think I'd looked at them on Friday. What was I doing Friday? Must have been busy doing something, because I completely missed how much they had got absolutely hammered. Amazon, 207, yeah, maybe. Probably should be 215 to 220.
Yeah.
Take us through what you think these should be trading.
Well, I mean, bearing in mind, you read every day about the valuations of these things, right? Which are trading on historic lows. I I just think it's very, 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 very difficult to form a very strong view right now, mate.
Well,
because I just think there's a big part of me that thinks that there's a lot more correction that needs to happen, and that somehow the market will figure out a way for this to happen.
Right. So where's correction territory then for you on the S&P?
The market hasn't moved. It's down 7%. 20% would be a decent correction.
But why would it drop down to 18 times earnings?
I don't know the answer to that question. All I know is that in my mind, I am preparing for this market to have an actual sell-off. We haven't had an actual sell-off in a very, very long time, and April last year does not count. Yes, I'm going to trade a bounce. Yes, my book is now max long, pretty much. That has got nothing to do with what I'm talking about.
That's a sell-off.
It's not a sell-off, mate. Back in the Rich Mcdonald that I met 15 years ago would be laughing at that and would be so bearish right now. You've completely changed your entire view on the world.
Because it's not an economic slowdown. It's one single stupid tweet.
Yes, it's fixable.
And this can be finished.
I agree, and it might be.
This isn't a Gulf War.
I don't think it is, and I think that we will have a bounce, and I think that you know, that we can potentially get ourselves out of this particular situation, but that doesn't change. We could bounce right the way back up to the highs. Then what? You're saying that we're just going to make all new all-time highs, and that's the end of that?
So
the market is cruising for a bruising, and we haven't had one yet, and that includes Mag 7 without discrimination, includes all the big boys. And I don't know how we have to have an economic hit, a proper economic hit for that to happen. And I just...
We know the playbook nowadays. Yeah. The central bank comes to the rescue.
You know, we do. Of course we do. But, so that means the market never goes down for the rest of time. And that's
the last 15 years.
I get it. And who was it that told you that? Me, in the first place, right? So that if I'm telling you that it worries me, but by the way, the market will come, the Federal Reserve will come to the rescue. That doesn't mean we can't have aggressive drawdowns in the meantime. Listen, all I know is that we have gone on for too long with the market being too complacent. And yes, now we've got this curveball, so we've taken a lot of heat out of the market. There's lots of cheap stocks. It's very exciting. We might have an aggressive rally. I'm lined up for an aggressive rally. But the big picture worries the hell out of me, because we have not seen a proper market drawdown in a long time.
I don't think you get those nowadays.
No, well, we don't actually. They're few and far between, but they do come every now and then.
Retail doesn't sell.
The only way it happens is if you get a Trump-like tariff thing, right, where it goes down 25% in 2 weeks and it just destroys everyone, and then it bounces back.
Well, let's take a look at that. Let's take a look at the price action of the Trump tariff. So this was last April, right? You obviously, this is the daily, so it's day 1, day 2. This is where we closed on the Friday, and then no, sorry, this was the Friday, and then this was the Monday.
Yeah.
So where do you think we are in this sell-off? And how
the current sell-off, I think we're very close to the end of it.
So we'd be down here. If it followed the same pattern.
Sorry, hang on. What's the time frame on that? Sorry, where are we?
This is daily, but you know, forget.
Have you gone back to 2007 in that chart?
No, this is April.
Oh, sorry, I'm just looking at the bottom. I was trying to work out what the hell you're doing. Yeah, so April last year, again, but as you correctly point out, the whole structure of the market and the world now has changed. So you don't really get these prolonged sell-off like we used to.
Yeah.
Now we just get these shocks, and the market completely freaks out and everything gaps down. And it happens in a very short space of time, and then we regroup, and we figure it out, and we go higher.
You think we're here?
Well, not in this particular sell-off, no, because I think we're going to bounce again.
Okay, so you think we're kind of down here?
If you were going to match the current sell-off to that sell-off, I think we're very close to the bottom of it. Obviously, okay. I mean, the book is long, really long. The question is...
But you think we get this?
Yes, 100%. Yeah.
No, I don't disagree with that, but I do think we're like here.
Yeah. We're right at the bottom of that. Yeah, we're agreeing on that.
We've got 10%. I don't think it will be as much as that, because of course it's only fallen by a third. So a third of 10%, 3.5%. I think we trade to 66.40. So let's put a line in the S&P at 66.40, and I will just remind myself that I have to sell it there. Where are we? So 64.30. Fill in if you want, Piers. You know, don't
Yeah, sorry, mate.
texting your missus.
I'm not really. I'm actually trading. I'm buying more Micron. So I bought 3 clips of Micron now. One was pre-market. They're very small clips, 250 shares each. To put it in perspective, for my book, a full position, which I'm not really putting on in this market, would be 5,000 shares. So I've got now 750 shares. It's a small clip, but I'm easing into it. And really interestingly, if you note what's going on here today, so you've got SanDisk, which is the closest comp to Micron, up 3%. No sellers anywhere to be seen so far today. Micron's having a washout moment. It's fascinating, actually. It's now RSI oversold, but this is one of the top stocks in the world that some of the top professionals are literally pushing very hard. So it's fascinating to watch the price action of Micron because it stands out from everything else in the market today. It's down hard again. And to me, that's a nice washout moment. So I'm going to get a little bit more aggressive on Micron in a minute. And we should do it for the book too, right? Now, if you're asking me when to buy Micron, it wasn't so much when you were asking last week. It's more now.
Yeah.
Like, I feel better now.
Yeah.
And by the way, can we, if we get time on this show, we've got to talk about this ridiculous stock called Fubo, do we not? No, you don't want to do that?
Waste of people's time.
Well, not really. Loads of people actually care about it, but yeah, cool.
Well, yeah, loads of people care about it because they've been stuffed into it and they're hurting after a 25%.
Well, it's more of an interesting story of this company that's got so much revenue, but yeah.
But now we're getting a comment from Sparkles. Sparkles, what are you talking about?
What's this?
But
what's the question?
That was due to policy. So so April last year was due to tariff policy, not geopolitical, where it can't be resolved with a tweet. The whole market's trading on tweets. What are you talking about? This can be resolved with one tweet when Trump says, I'm out.
That's that. In the knee-jerk reaction to that, yes. But in terms of the actual, how much the infrastructure has been damaged, how much of a bottleneck we have, how much Iran wants to continue to run with the bit between their teeth, which they kind of think that they've got, how much that Trump genuinely means that he's just going to leave and let everyone else mop up the mess. I think from that perspective, it's not as cut and dry as him doing the tariff thing, because he literally was pulling the strings there, right? He was like that.
Yeah, but there was meeting after meeting with China.
Yeah.
It was always delayed. There was then another tariff. This is the same playbook.
We got news, by the way. There's a big algo that just went through.
Oh yeah, there we go. Right on when we're talking about.
What is it?
Somebody give us the news. Tell me, should I be buying Micron?
Yeah, I mean, seriously, what is the news?
I'm buying another.
Here we go. The market's moving now.
Anybody seen it? Anybody seen why we are gapping higher?
Yeah, well, we'll be the last ones to know. So good, isn't it?
You got a Bloomberg terminal.
I do, yeah, I do have a Bloomberg terminal, and
danger when you're clicking on news. Then
yeah, should we do that? Yeah, here we go.
Not from Truth Social.
But again, when the algos get it, I mean, it might be nothing, but it might be just the algos kicking in again.
Yeah. It is only the US that's responding as well.
Yeah, it's actually not big enough for there to be any particularly significant news, but it'll hit the tape.
It's just that the market wants to go higher, doesn't it?
It does. It's trying its best, right? I mean, and we're just going to have to filter our way through it. What just happened there? Oh my god. Yeah, interesting. Interesting. And Micron's moved. Okay, I'm going to buy another clip of Micron, I think, probably.
How many clips have you got in you?
Well, loads, mate.
Right. Okay, while we're trying to find out what is going on in the market, I will be very happy to take you through my ISA. Chicago PMI below 54.8.
I mean, that's not much. And by the way, we've got JOLTS job openings in 10 minutes.
Oh, that's going to be fun. Should we stay on air for that?
I think we have to, because I was saying to my community this morning, the macro data is a bit boring in terms of the inflation stuff, because that's all going to change next month. But what it's not boring is that anything to do with the labour market. And that is obviously JOLTS job openings. And then, of course, we have the big one on Friday, something called non-farm payroll.
Right, my ISA and SIP, here they are. You can see where I've got my proper account. So I've done this as neatly as possible for you. It doesn't add up to 100 because there are, smaller ones below 1.8% there, including Smarter Web. Don't worry, that do have some of that. But starting from the top, my biggest position is copper. That is because I truly believe in this over the longer term. Of course, I use my ISA and my SIP for long-term positions. Then we've got, the boring ones. Yes, he's not that exciting. I've just moved from cash into gilts and treasuries. So we've got a mix of maturities. We've got gilts right up the not to 5 years and 15 years plus, and then they've got the 10-year Treasury bonds. Now, then we've got S&P 500 equal weight. Okay, so I don't hold the normal one, I hold the equal weight. And then Diageo is there. 6.6% of my overall portfolio is in Diag.
Yep.
And then Whitbread. And then Micron, as I say, I started buying that a couple of days ago. On Friday, maybe on Friday actually, so got hurt bad yesterday there. That's 3.7. We got IAG, bought that about 10 days ago. We got the FTSE 250, I bought that on Wednesday. We got the Legal & General Russell 2000 small cap. And then Nike, that'll bring us on to Nike. I'm worried about that tonight. I think that's wrong actually. I think they're gonna have terrible numbers tonight. But still holding that over the long term. Then emerging markets, and then EasyJet, Barclays, both of them bought within the last 2 weeks. We've got Japan, now we're down to 2.5%. Informa, cash of 2.3%. And then UK smaller companies, so even smaller than the FTSE 250. So that adds up to about 94%, I think, and that is the majority of it there. You can see a lot of this is taken from The Art of Investing, right? I've got treasuries, I've got gilts, I've got copper, I've got Japan, I've got Russell 2000, I've got FTSE 250, I've got emerging markets, and that is a lot of what the podcast, The Art of Investing portfolio is invested in. So I am, putting my money where my mouth is, you could say.
Yeah, very safe, sensible book you've got there, mate. Wouldn't expect anything less.
Andrew Morrison's saying, Piers, Glencore's done well since I brought it up last week.
I doubt that is what he's saying to me.
I
haven't even mentioned.
Unlike Antofagasta, he says. That's
true?
right, Lord Maxter. These are my ISA and SIP. So these are long-term investments, but me taking advantage of the drop in the market down to a point where I think that over the medium term, these will show the valuations are right for me, the opportunity is right, and I think those are the companies that I believe in. Right, so we got 5 minutes left then, Piers.
Yeah, well, let's. What have we not talked about? I mean, it's worth mentioning some of these, some of the underlying strength that we see in the market, like and not on days like today when all the junky stuff has bounced back. I'm just talking about the high quality companies in the software space, in particular, like Salesforce, that's doing a big buyback at the moment. So there's a lot of support for that stock, and also just the ongoing narrative that these guys are going to have their lunch eaten by AI. And Mark Benioff was on tape again the other day, just saying it's just not true, because not only have they moved to software or AI agents as a service, I should say, but then these companies are very high quality with loads of free cash flow, loads of decent margins, blah blah blah. So it's interesting. But today, and probably if we get, look what the market's trying to do. We don't really have a proper headline, right? So imagine what happens if the market is itching to go higher. SanDisk is now up 5%. I mean, I've taken my hedge is almost completely off, but I'm very long this market right now, which is kind of nerve-wracking, but we'll see how we go.
And the exciting thing is there's no headline, which means it's probably from people that have got a sniff of something.
Yeah, maybe, yeah. I mean, just goes to show you, right? I mean, the market's just itching to go higher. It terrifies me to be saying this, especially when you're so bullish, but...
Right, so what happens if we had a peace deal at 5 p.m. this afternoon?
Market will be up so heavy. And this is the thing that people don't understand. It does not matter what happens in 2 or 3 weeks' time with regard to economic data. The positioning alone and the machines will just force this tape so high.
Where?
It's a great question, because I know you want me to say all-time highs, but I just don't know whether we'll make it there. I think the machines will stop before the all-time highs.
Right.
I think let's deal with the S&P, right, which is the adult in the room, if you will, in the indexes. That could be up more, 3.5%, 4%
in a day.
in a day, which is a big move for the index.
So take us, so that's...
Russell index
that's
would be up
another-
5.
Yeah, that's another 2. So it's 150 points. So it's 6,600. I think that's about right. I think that's where the market should be, 6,600.
Yeah.
And yeah, Russell will be up.
And Micron's green now. Here we go. This is the moment when it gets really interesting. But yeah, I mean, it's all warming up. I'm so happy I took some IWM short off. I've got a little bit left, but the book it's very long now. I mean, let's be honest. So we'll see how we go, guys.
I have to remind you, I apologise, but we are not going to be on air tomorrow because of the Easter schedule.
Oh, yeah.
We have to record the podcast a day early, so we'll be doing a podcast tomorrow, which will be released on Thursday. So Art of Investing coming out a day earlier on Thursday. What's your plans for Easter?
My children are still in the sweet spot for that, mate. So they are very excited. Very excited about me doing the Easter Bunny Trail. Finding chocolates in the woods and all that kind of stuff.
Nice.
So yeah, to be all about the kids, mate. What about you?
And yeah, it's not often that all markets across the world are closed, is it? On a Friday.
Is that actually what's happening? I didn't even look at Micron. Sorry we bought more, right?
We did. Yep. Added another 25.
All right, fine, good.
And do you know what? I tell you, the P&L. So yesterday, I'm so glad we weren't filming yesterday, because just to update you on the portfolio, yesterday this portfolio was down £7,000 in the morning.
Yeah.
Now I've taken probably a grand of losses of that. So we've gone from down 6 to up 2.
Yep.
In 24 hours. So you can see how leveraged we are to the well, not so much to the upside, to lower volatility. Remember, this is a short vol book. It's now long as well, but it's a short vol book. So all these options down here that I'm short, puts in the S&P 500, those are they've been really hurting on the way up, but now at last they're starting to give me some of the P&L back. But remember, they're down at 5,900 and 5,250. That's why I'm short those.
Yep. Fair enough. I'm just fascinated about what's going on here, mate. We're obviously, sadly, not, as you just mentioned, not going to be on air tomorrow. Oh, by the way, we've got about 30 seconds until the JOLTS job opening, so let's go through that when we see it. But yeah, this market is just, I mean, we haven't actually got anything. But what's oil doing, mate? Where's oil today right now? Is that even moving? It's extraordinary, isn't it?
Let's see, JOLTS. So JOLTS going to be the end of the party, or is it going to jolt us even higher?
You love that, don't you?
Right, where are we? JOLT job openings. Expected is 6.92 million. Are we even looking at JOLTS anymore?
I think someone's winding up about Vodafone, mate.
In line.
In line. Well, that's good. We can go back to sleep. Good.
Yes, I noticed the comment on Vodafone. Yep, Vodafone I had for the buyback and held it all through the buyback, traded around it, but the buyback now comes to an end. So I think that some of the upward pressure we had will now, or the support at least, 113 though, what a trade that was. Jeez. You can see for the last year and a half we've been long this, so from 65 pence, or was it 70? There you go, there's good old Phil. So yeah, we've gone from 70p to 113, but I think for now that is that's enough for me. Leave some on the table for the next man, Piers.
Fair enough, mate. Can't argue with that. So yeah, we're signing off, are we? Short job openings are non-event, so we've got non-farm payrolls on Friday. We won't see anyone tomorrow, but thank you so much for tuning in, and let's strap in for what is no doubt going to be a fascinating 24 hours. The market is either seen a headline that we haven't seen, or it's just doing what we thought it was going to do anyway, which is look through all this and then bounce hard. Let's hope it does, because I'm very long.
Or somebody's going to be moaning in 24 hours time. Insider trading.
Oh yeah, God, so boring.
Trump must have been buying the market before he announced something.
Yeah.
Where can people find you if they really want to see your face tomorrow?
I will be, what am I doing tomorrow? Well, I mean, those of you who are not in my community, come join. And those of you who want to come to my seminar on the 30th of May, in St James's, please come to that. It's going to be Rich Mcdonald, another friend of mine who's a veteran of the industry, talking, and loads of very serious retail investors who are all amazing, who are part of my community. It'll be a great moment to network and learn about markets and understand exactly what's going on right now, which is where the fascinating macro environment is changing the way people think about markets.
Right, so by the time we see you next week, where will oil be? Will it be up at 120? There's probably a...
I hope not, mate, because that's going to put a spanner in the works.
Yeah,
maybe let's get out of this position first, right?
Well, I'm tempted to buy oil as the hedge.
Your hedge, yeah. Really? Where is bloody oil right now?
It's at 100.
It's not
Dead
even,
on 100.
not even moving, yeah.
I really think that somebody in Washington is just sitting on the offer.
Yeah, it's strange. It's got an eerie feeling about it, doesn't it? Yeah.
Good stuff. Right, thanks very much for joining us. We shall see you next Tuesday.
We love saying that, don't we, guys? See you next Tuesday, guys. Thank you very much for tuning in.
Peace.